People make funny price predictions. People use funny models, try to emulate where might Bitcoin go. But in the end, the differentiation between a good and a bad model is really what counts. In this video, we are going to talk about a lot of models, and I will tell you what I like and dislike about them. There's the 200-week moving average. There's the feed and greed index. There's the logarithmic regression. There's the realized price, the market value to realized value z-score, the realized hodl ratio, the value days destroyed, the 1-year hodl wave, or actually all kinds of hodl waves, and the number of wallets that hold at least one Bitcoin. So many charts, so many models, so many numbers, so confusing, but I will go through this one by one, and there's real value here. I personally use some of those models, and I have timed the last top in 2021 quite well with this, selling most of my Bitcoin at roughly 60K. And so even though it's complicated, we try to make an attempt to answer the question how long this rally can last, or at least what things to look out for and when to potentially sell. Let's start with model number 1. The 200-week moving average. This historically had been a very good floor for the Bitcoin price. Keyword here is historically, because this completely broke in 2022. We'd been below the 200-week moving average for months. There's no real reason to believe that Bitcoin always has to be above that moving average. And if you look deep into the data, you might already know that concept, the concept of diminishing returns. Bitcoin tended to grow much faster in the early days when it was just worth a few cents, at least relatively speaking in percentage, compared to today. Nowadays, doubling Bitcoin takes a ton of capital. When Bitcoin was just a few cents, it was way, way easier. So it's only rational to assume that growth slows down, that volatility might not slow down as much, and as a result, we might get wicks below that 200-week moving average. It's simply logical that this model breaks. And so if you hear other YouTubers one day talking about that moving average, feel free to either ignore them or to post the link to this video there. Next, the fear and greed index, an index that especially roughly half a year ago, a lot of people are looking at. I don't see it being posted that much anymore, and for good reason. I don't like this either. There are different ways to calculate this. Currently, we are at greed. This is a scale from 0 to 100. And just look at how this historically performed. Would you always be buying when people are fearful? Then you'd be buying all the way down from 10K to 3.5K. Should you be selling when other people are greedy? Then you would have missed this rally from 15K to 60K. This indicator flips too fast. It performed really poorly in the past, so why look at this today? Ignore when people talk about the fear and greed index. Next, the logarithmic regression. This is a playful way to look at this, right, on a rainbow chart. And it looks like it encompasses the price movements over time quite well, right? We peak at the red, we bottom out at the blue. Maybe we want to dollar cost average in hard in the blue, and we want to sell at the red. Maybe the upper bound for Bitcoin right now in the close future is 260K. But here comes the problem. This curve had been refitted several times, and it makes sense, right? You get more and more data. Suddenly you have to wiggle around with this curve to make it all work. I don't say this is a useless model, but definitely don't over rely on it. Here, look at the previous fittings. I had to go to the Wayback Machine to find this. This overestimated the growth quite a bit. Only afterwards did we get the curvature in here. And also note how we did not hit the red area. If you waited until say 90K or so, right, the top red band, then you would have failed to take profit here. So directionally, it's not a terrible model, but it's definitely not perfect for market time. No model is perfect, but still don't over rely on this. It's good as a general guide, but don't use it for more than that. Let's have a look at the models I find genuinely useful. Let's look at data that you can only derive in crypto. Let's look at data that looks at the blockchain itself, not just at price history. What we have here in the background is the realized price. That's a very special type of moving average. In black, we've got the Bitcoin price, a long-term chart again. In orange, we've got the realized price. And this looks at for what price in aggregate did Bitcoin move hands the last time. So we look at all the wallets. We look at what point in time did they have a transfer in the past. And then we simply take that Bitcoin, say it was 5 Bitcoin that were transferred at $10,000, and then we put this in average to all the other transfers. So we know in aggregate, the market at what price was Bitcoin bought or sold for? What's the reference price of the entire market? If the current price is above the realized price, then the whole market is in profit. If the current price is below the realized price, then the whole market is in losses. Now that's super useful information, right? Because when the whole market is in losses, probably the sell pressure is very much diminished if you believe that Bitcoin over the long term will still outpace fiat with its lower inflation. On the other hand, if we are now very high above the realized price, a lot of people have unrealized profit, unrealized gains, and they might consider moving some of those gains off Bitcoin and put it maybe in stocks or in property. So the reference price of the entire market, or the realized price, is super, super useful. And so now that price is at 21,228. The market as a whole is already 2x in profit. Isn't that great to know? Now there's a model that's even better than that. It's a bit more complex, but it's even better. And that's the market value to realized value Z-score. This video is sponsored by the premium membership. I never take any money from any crypto project. I never take any affiliate links from centralized exchanges. I never pump and dump coins. Instead, I offer valuable tutorials in the premium membership. Feel free to check it out. Now, market value, market price is pretty much the same. Market value simply just looks at the number of Bitcoin times the price. It looks at the same thing. Realized market value, realized market price. So that's RV in the MVRV score, realized value. Market value is simply the current price, right? So we're looking at a Z-score of the market value to a realized value. Z-score here means is we look at the volatility, as in how much is the price going up and down, relatively speaking. If there's a lot of volatility, a lot of shaking going on, then you can accept a higher extreme value on the tops and on the bottom. If the volatility is relatively low, then just a little bit of a jump already makes quite a bit of a difference. So what we're doing here is we look at the unrealized profit and we put this in relation to the current volatility, to the current action in the market, so to speak. When we are green, then again, the price is below the realized price. This time the realized price or the realized value is in blue. When we are out of the green zone, then the market is in profit. When we are in red, the market is in massive profit. Look at this. This goes up all the way to 8. That's when the profit was 8 times the typical volatility at that particular moment. Now the peaks don't align perfectly. They are diminishing to a degree, but still it shows us, even though the market in aggregate is currently in massive profit, we are very far away from those massive peaks. There is a lot of further room to grow. And so this chart is one of the reasons why I'm not selling any of my Bitcoin now that are dollar cost averaged over the last months. Next interesting model, the realized HODL ratio. This looks at activity in the last 2 weeks relative to activity in the last 2 years. In other words, how much short-term speculation is currently going on relative to the long-term holders. If short-term speculation is high, we tend to be heated. A lot of new entrants in the space. When there's no new entrants, when there's only long-term holding, then you want to be buying, right? Then we are at the bottom in the price. Also here, the peaks don't align. Also here, the peaks rather tend to go down over time. But again, an indication we are probably not yet at peak Bitcoin prices. Next useful model. This model looks at activity of long-term holders. Are long-term holders selling? Are they destroying value days? Now, what on earth is value day destruction? Think about it this way. You buy a Bitcoin today, 1 Bitcoin, and you hold it over 10 days, and then you sell it. At that point in time, you have destroyed 10 value days. Now, another example, you buy 10 Bitcoin and you hold it for 100 days. Then after 100 days, you move it again. Now you have destroyed 1,000 value days. The idea is that this indicator peaks out when the long-term holders that normally don't move anything whatsoever, when they are moving, when they are selling. The people that are usually dormant, that don't do anything with their Bitcoin, that have it just in their hardware wallet, when they suddenly wake up, when they move their Bitcoin and they are selling it to the new entrants, to the people that get hyped by those high prices, then you want to be careful. Then you also want to be selling. And have a look how well this worked. Peak over here, peak over here, peak over here, price peaked here as well. The long-term holders exit really well. Another 3 peaks over here, Bitcoin was very elevated as well. Another peak here when Bitcoin was at 40K. It's not perfect, right? Bitcoin went another 50% up from here, from 40 to 60, later on to 69K. But still, if you're selling in line with the other long-term holders, you're doing pretty well. And even though they might be selling a little bit too early sometimes, they're probably not selling too late. And yeah, we are not peaking. Isn't that great news? There's no spike here. The long-term holders aren't selling yet. By the way, all of those charts can be found on lookintobitcoin.com. Do you see this in the background here? Look into Bitcoin. Simply enter this .com and you find those charts there. It's all 100% free. On the topic of long-term holders, there is very often the number going around that so and so many Bitcoin haven't moved in the last year or haven't moved in the last 5 years. There is a chart for this as well. And when this tends to be high, liquidity in Bitcoin tends to be very tight. So every additional purchase from dollar cost averagers or from new entrants pushes up the price a lot. Look at this. The 1 year hodl wave in orange, whenever this is high, this is then when subsequently the price goes up. As the price goes up, the 1 year hodl wave goes down, right? The people that bought before are selling into the rally. Again, a very high level over here in September of 2020. That's when Bitcoin was very, very tight. And then we moved from 10K all the way to 60K. Now we are at an all-time high again. That's super, super bullish. You might hear a bit of bias in my voice because, of course, this is the Bitcoin strategy channel. I hold a lot of Bitcoin as well, at least relative to my wealth. And so, of course, I want the price to go up. But still, those are models I have used for a long, long time. And they are models that served me well, and they are models I expect to continue to serve me well in the future. If long-term holders aren't moving, who's going to depress the price? I don't know, the short-term holders probably not. There is a more fancy version of the same chart on that website. This chart and this chart is the same. This is the 1 year hodl wave. But this time it's split up. What Bitcoin didn't move for 10 years or 7 years or 5 years, etc. And you can modify this. You can add, for example, all the wallets that have moved up to the last 6 months. Or you can remove, you can look at what Bitcoin didn't move in the last 2 years, also at an all-time high. Or in the last 3 years, very constantly increasing. In the last 5 years, we barely see a blip. So Bitcoin gets tighter and tighter over time. This Bitcoin, in aggregate at least, might even be lost, right? When it didn't move for entire 5 years. So what makes me so bullish on Bitcoin long term? It's not the adoption as a payment network, right? Bitcoin isn't really used as a payment vehicle. It's used as a savings vehicle by more and more people to protect against inflation and to protect against the shenanigans in the traditional financial world. And so what's important to me is simply how many people hold at least one Bitcoin for saving. And this is continuing to increase every year very constantly. This is great. This tells us that over time, Bitcoin will outgrow fiat. As long as there is more and more adoption of people that hold Bitcoin, as long as Bitcoin gets spread across more and more people, we are going to see further appreciations after every single bear market. I doubt you've ever seen a breakdown of models like this on YouTube. So if you found this useful, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. Feel free, of course, to share this with your friends as well. One more thing, there's a free Telegram channel. If you haven't joined that yet, feel free to do so. Link is down below.